Trader Merlin show. It is your Wednesday afternoon. I thought it was Thursday for a second. I was getting a little excited. I thought we were into the weekend. It is your Wednesday afternoon edition. We are, again, going through our guest week here at Trader Merlin. Hope I might even find someone for tomorrow to do a clean sweep of the week. So one thing we haven't talked too much about, almost neglected, I hate to say it, is the global currency markets. And we are in a situation right now where it is a battle amongst almost every central bank out there to raise the rates as quickly as possible to try to fight off inflation. Of course, if you're Japan, you're just sitting there going, nope, we don't need to do anything. We're perfectly fine where we're at. So I thought it might be fun to bring David Warner on the program, who is one of my resident experts in the currency markets. You can see our topic today is Central Bank Tsunami. For those who are wondering, yes, that is a picture of a tsunami blasting the Federal Reserve. And of course, there is an AI-generated picture of David Warner, which Lisa says, I don't know David Warner, but I do see he's quite handsome. Or is that just an AI thing? No, it actually is the real deal Holyfield. That's, slight modification. I didn't have the 5 o'clock shadow, but there he is, the handsome man himself, Mr. David Warner. How you doing, buddy?
I'm doing very well. Thanks for that, Merlin. How are you?
See, he's shy too. He's kind of blushing over there now.
Yeah, I'm blushing.
I'm good. Just another day. Obviously, this week has been a wild one. Lots of fluctuations, and of course, I think it's just setting the stage for what's going to happen next week. But as a trader, regardless of your asset class, how's your day? It is what it is. The markets are going to move up, down, or sideways, and it's just my job to tackle it. So, give me your take on the tsunami. You came up with a topic. I said, David, give me a nice topic for today to discuss.
Yeah.
Central Bank Tsunami. So why the Central Bank Tsunami, and how are you approaching it?
Approaching it carefully is probably the best word to use first. But it is a tsunami. Like this is just such a massive week and month for the currency markets and valuations of these currencies. And honestly, it's not even just like currencies, it's like everything, because, obviously equity traders are going to be hanging on to what the Fed is going to do this month as well. I mean, I'm sure, the last couple of days it's kind of all eyes on Jerome Powell speaking on Capitol Hill. And I mean, I think he really rocked the market.
He wasn't gentle. I mean,
no, it wasn't gentle. It wasn't gentle at all. And I mean, honestly, I found it quite shocking. And honestly, it's a little scary when it happened, because is this like just the calm before even just kind of like a worse storm? And now it's like, it's becoming, the market's just going to become so much more kind of data dependent as we just kind of go through kind of the end of this cycle. And now, it's just, kind of waiting for what's the job report going to be on Friday? What is the CPI going to be on Wednesday? Because that's probably going to give us a much better picture on kind of what the Fed's next move is going to be with the rates.
They've been wild. Actually, in the chat, everybody, I am now sending over a link. So I'm going to try to release an article every Wednesday for barchart.com. I would encourage you to go to read that one. One thing they don't do at Barchart is I don't see like a feedback area underneath. Normally, you can heckle and troll people on social media by just commenting below their articles, but there isn't that feature at Barchart. So if you guys read this article I just wrote, give me some feedback if you would. I'm still not the best writer in the world, but I just put my thoughts down on paper and kind of run with it. So you can email me at tradermerlin@gmail.com if you have any feedback on that Barchart article. But what I really wanted to get into in that article was, going back to Jackson Hole. And I know, David, it's probably one of your dreams to go to the Jackson Hole Symposium, right?
That's my dream.
That's it. Maybe we'll be like Dumb and Dumber, and we'll just take a bus or a van that's shaped like a dog. We'll drive out to Wyoming, Jackson Hole. We'll just try to crash that party.
You want the orange tux or the baby blue?
You take your pick. I'll give you first pick, man. It's all yours. So you're saying there's a chance. At that meeting, he mentioned people are going to feel some pain, expect to see some pain. I was like, nobody really wanted to hear those words. Just say outright, you're going to feel some pain. That's a pretty bold statement. And in the article, I outlined the three main areas he talked about, which were slowing growth, rising interest rates, and the unemployment numbers. And I won't steal the thunder from my article, but one of the ones that surprised me, and you mentioned this Friday, we do have the unemployment data coming out, was we're currently at 3.4%. And 7 months ago, we were at 3.5%. He said, we're going to see, tightening labor market. We're going to see it rise. And we're actually still going down. So if I look at it from the Fed having flexibility perspective, meaning if unemployment stays really low, the Fed can be more aggressive with raising rates, right? Because those rate hikes haven't hurt people yet. So on Friday, I think it's probably one of the bigger announcements for the week. But at this point, the Fed seems to have a green light to raise even more. And we saw with his comments on Tuesday, Fed funds futures went from a 30% chance of a 50 basis point increase to right now, I'll look at it, it was 79 as of this morning. We're at 78.6% chance of a 50 basis point increase at the March 22nd meeting. So, the writing's on the wall that the Fed is going to be raising rates and be more aggressive. So how does that impact you and your trades? What are you looking for?
You're really honestly for currencies, probably one of the first things to look for is just kind of interest rate disparities. And, just the Fed is all of a sudden turned into really, in my opinion, the most hawkish central bank out of all of them right now. Mm-hmm. And I don't, there's the famous "can't fight the Fed" quote there. So, I mean, I can pull up some charts and
feel free. And yeah, don't fight the Fed. And they have telegraphed their punches so vividly. It's not like, I love having Bill Addis on the program. He's one of my favorites. He goes, you go back to the Volcker days. Volcker wouldn't say a damn thing. All of a sudden, just a shock announcement would rock this system. And Greenspan kind of did that, but a little more transparent. And Bernanke was more transparent. Yellen more transparent. It seems like Jerome Powell's just like, hey, here's what we're doing. So just so you know ahead of time. And while I like that, I kind of like the shock factor that Greenspan brought to it.
Yeah. I was honestly like, I saw that the 50 basis point hike was being priced in a little bit more. And I mean, I could see it. I think that I was listening to some podcasts just even before I came on here. They had Bloomberg Surveillance podcast today. And I maybe these guys don't listen to each other, like what the message is kind of right before. But it's like they have one guy on there is making the case on why the Fed cannot raise 50 basis points and why that would disrupt everything. And then the very next person's like, now they definitely have to raise 50 basis points because if they don't, they're going to lose their credibility. But
well, let me put you on the spot then. I'll let you pick. You can pick. Which would you rather argue for? Would you rather argue that the Fed has to increase the rates from here, or that they should start cutting rates from here? And let's have a fun discussion. Go whichever side you want to argue. I'll argue the opposite side. Because, I mean, as a trader, you it's like a lawyer. You have to be able to defend and prosecute at the same time. And kind of our job as traders is to come up with those arguments, right?
Right. Honestly, I think one of the easier trade, I think, would be not to raise it 50 and just kind of continue and stay on the 25 basis point hike, because I feel that if the market knew that was going to be the path, I think that would be an easier trending trade. And then I could start seeing the dollar kind of weaken again, because the market, the way that I'm going to pull up my chart. Hold on.
Yeah, please.
You got to give me you got to give me the share button.
Oh, I always forget to do that. Yeah, I actually have, I have it up here just until I get you ready to go. But I have the dollar index up here, and you guys can see dollar was slightly up today. I actually expected there to be more follow through on this one, but if the Fed does keep raising these rates and telegraphing those punches, expect this dollar to keep on rallying, and of course, a stronger dollar puts some pressure on our equity markets to the south side. So,
definitely does.
Mm-hmm.
I could tell you what I think the overall markets would rather have. I think the overall markets would rather them have the kind of the obviously the lower hike. Did you give me the share?
I did. Yep. Yeah.
Okay, great.
Yeah, I mean, it's obvious that the Fed would love to not raise rates. I mean, let's just, as a matter of fact, they'd probably prefer to be cutting here. But, you have every other bank, not one is cut yet, right? Japan stayed the same. They're the outlier that just doesn't make a difference. But you've got the EU, you got the UK, Canada. I'll bring up some more rates here, but you got Canada has been raising. Australia just raised. And actually, not raising. Canada stayed the same this morning. Yeah. Not raising and staying at 4.5%. So they've stopped for now anyway, which is a sign. All right, I got your charts.
Yeah, so what I was, basically we're going when the market was thinking that we were not going, that inflation was subsiding and things were okay. This is basically what the trend started to look like. And then obviously as the data and everything started to come in stronger, that obviously had just flipped. in my opinion, it brings us to a very kind of like a critical kind of line in the sand. The price points that you see on the screen are big price points that I've just constantly kind of gravitate towards and look to, and I can kind of see as kind of approaching a big one. And typically, this space right here between two greens, this space that you see, this is typically the path of least resistance. And so the scary thing, and it's not necessarily scary, but I was like, if you want to be bullish on this currency, that if it starts to kind of break below this green line, it really opens up the door for probably a pretty quick move, even at least to this midway point where you can kind of start seeing maybe some demand kind of come in again. But it's not going to look pretty. We started to move below, big 200 and 100-day moving averages. They had kind of holding us up there for a bit. I was using that to hold us up. And it was Jerome Powell. This is the Jerome Powell
effect. That's him.
Effect that basically took us back below the 200-day moving average. And so that is
let me paint the picture. So for those listening to the podcast, you probably have no idea what chart we're looking at. We're looking at the British pound US dollar currency pair, and really from those lows in September of 2022, it was a beautiful run up, right? I love the fact that it was that low, because that's when I went to Europe, was when it down at the almost 103. David drew a nice little blue trend line here outlining those lows, kind of connecting those real bodies. And really up until February of 2023, it maintained that uptrend. Now it broke it. And now you see actually a fairly nice downtrending channel for about the past month on this one. And the targets he's got, the upper green line he mentioned, is at 1.175, and then the next one is at 1.125. So that between those two levels is where he's targeting, saying, look, if it gets below 117.50, then there's a good chance you could see it drop pretty quickly down to 115. And that's predominantly because the U.S. Fed is so aggressive. So if the U.S. Fed is aggressive raising rates, that's going to have a negative impact on the pound and a stronger impact on the dollar, which is what we're looking at.
100%. And honestly, and there's some other kind of interesting plays here on this, because you just mentioned the kind of the CAD earlier, and the Canadian dollar, they did. I mean, they're sitting and they're sitting flat, right now, and you have other central banks raising against them. So if I just put just put it on the paper, what are the banks raising interest rates? What are the banks not raising interest rates? You got a little bit of kind of the fundamental, kind of push there to kind of help this even go higher. And so, this is obviously kind of trading with this channel, but I was just looking for, a little bit more of a pullback to kind of jump into this. But we have, in, my opinion, we kind of we didn't make it this time, but a lot of my trades is I'm just, connecting major price points. A lot of them is I do a lot of these green to green type trades, and us kind of getting in there, it kind of exposes the door. At least I think, as long as we're staying above 137.50, we're at $1.38 right now. And so 137.50 becomes kind of like this kind of a level that I kind of manage risk off of. And then I could say I'm going to at least try to get to 140, or even kind of 142.50, but just kind of using kind of the next lines up. I think the Canadian dollar, I think could, at least for the time being, kind of be one of the laggards. I could see Australia and New Zealand kind of falling into that as well, because Australia and New Zealand, I mean, they've been kind of taking a hit. Australia in particular, we broke that. You can see, I'm hoping you guys still see in my charts here.
But we
broke through. This is that green area that I was just talking about. And you can see we kind of broke through, and I would assume we're going to get at least to this halfway point, which is 65 cents. And that's just the wild card. I mentioned it's called a wild card for a reason, because I don't know if it's going to be a nickel and throw me in the opposite direction, but it's not looking good. And as they've revised, China's GDP growth has been revised lower. That's not going to help with these currencies. If we do get a slowdown, typically, I mean, these currencies are kind of linked to commodity prices. So if there's kind of a slowdown, commodities, start to kind of weaken out. Some of these commodity currencies, I think, could be in some in some trouble.
Yeah, and we have
And
seen.
when you
I'll real quickly show them my chart here. You can keep yours there if you want. But here's gold. You can see that sell-off kind of coincides with what you saw with that Australian dollar on David's chart, which is, gold's been showing a lot of weakness here since the beginning of February. Now, crude oil, not as bad, really just kind of sideways chopping, but, Australian dollar, one of those commodity currencies, so especially from the gold and metal side, so it's something to pay attention to there. If those commodity prices continue to fall, you might see some more pain there for the Australian dollar. Now, you've got it mapped out pretty good from that 67.50 mark all the way down to 62.50. I agree with you. I think that next stall point looks to be right around 65, kind of the middle of that range, and then ultimately, 62.50 is a pretty logical target there.
Yeah, and speaking of just kind of the central banks, and you were talking about earlier how I apologize, I'm forgetting your wording. You're talking about like kind of a recession and like how we have just not. Maybe we don't want to admit that it's here or it's coming, or we did that for so long. These other central banks, they don't do what we're doing here. They don't say, well, maybe it's going to be a soft landing and like everything's going to be okay. Like I listened to the central bank governor of New Zealand in his last statement. I watched his press conference, and he's like, it's a global recession. That's what we are. That's what we are forecasting. And I'm like, here's this guy who's, on the other side of the world, and he's saying it. And, it's like, why are we kind of holding off on that for so long? And then, I was listening to, if you listen to like Bloomberg Surveillance Today, they had a guy on there and they said the reason why we're not in a recession yet, and they're not telling us about a recession, is because we're going to be heading into an election season here soon, and we can't be having a recession in the background.
It's always something, right? It's always got to be something. Real quick, while we do that, I'm going to run through some rates here. So David just mentioned New Zealand, and I'm just bringing this up to show you the intensity at which some of these central banks are raising. So what you see on my screen here is the I always get the name wrong. Is it the Reserve Bank of New Zealand? Yeah, it's the Reserve Bank.
Reserve Bank of New Zealand.
For some reason, I always want to call it the Royal Bank of New Zealand.
Sounds better.
It does sound pretty prestigious. But you guys can see this hockey stick at the end here. You go back into July of 2021, they're essentially at zero, right? Which is pretty much what we were at as well. And now they're at 4.75. They recently raised another 75 or another 50 basis points. So this obviously is going to take some time to impact the economy. In the article I wrote for Bar Chart, most would say that it takes between 9 and 12 months for rate increases like this to impact the economy and hit the bottom line. So we still have some time before this filters in. But one thing that's different about New Zealand versus some of the others is look at historically. This goes all the way back into 2000. I mean, New Zealand had a central bank rate of over 8% going back into 2007. Now, let's fast forward here and go to the U.S. Let's go to, we'll just do, since we're on this week, let's start with Australia. So here's Australia, which raised 25 basis points on Monday. They also have a pretty clear hockey stick, but do their rates look as crazy as New Zealand? Well, they actually do. Back in 2008, New Zealand was over 7%. Other central banks we've got reporting this week, here's the Bank of Canada, just to put that one into perspective. And the reason I'm bringing these up is just to show you how aggressive. You haven't seen anything on this chart for Canada that's as aggressive as what we're witnessing over the past year and a half. Even going back into 2000, Canada was sitting at roughly 5.75, and they've gone from 0 all the way to 4.5 in just about a year and just over 1 year. Now, the big story, obviously, is Canada. Here, let's just have fun. And I'll bring up the, here's Japan. Yeah, that's right. It's just a flat line for as long as you can see here. So there's really nothing to see, people. It's been negative 0.1 for the longest time. And lastly, let's bring up the U.S. markets, because that's going to be the big daddy in 2 weeks. And there's going to be more that week as well. The Swiss National Bank, the British pound will also be coming out with the rate statement, but it's all about the U.S. dollar. And here is our market. And we were unwinding our balance sheet starting in 2015, at least the Fed was, and started to raise rates, and things were looking okay, looking fairly decent. And then all of a sudden, COVID hit, they had to slash it down, and now all of a sudden we're ripping back to the upside. Where were we historically? Well, if you go back into 2000, we were up at around 6%, 6.5%. So we still have a ways to go to get back up to those levels, but just want to show you the magnitude and the intensity with which the Fed is raising. I would argue that this hasn't hit us yet. The data looks good. The GDP numbers look decent. Unemployment numbers look decent. CPI is starting to drop, but we still have a lag time before these interest rate increases really start to impact our markets, and I think that's when the pain comes. That was a long-winded segue there. Sorry about that, bud.
No, that was good.
You're the guest, not me.
That was great, man. No, I agree with everything. I mean, I is really going to be interesting to see what the what we do here with March 20, March 22. But I mean, I think the dollar. I think we are. I think the NFP numbers on Friday, they're probably going to be pretty hot. I just noticed. You might still have a screen.
Yep, you got it.
It's just everything you see coming out, even just anything to do with jobs. It's just I constantly just see green, and that's not. That's and you can't really predict the future what Friday's going to bring, but if every freaking data point that comes out is hot, you just keep under the assumption that we're just going to get another hot data point.
Well, when you say hot with those ones, so keep it right there. You got USD right at the top, the ADP non-farm employment change that came out today. You look at that number and that's showing you a significant number of new jobs being created. So while we say hot almost implies that it's bad, right? I would argue that's really good. That means that there's more jobs out there. There's, that there's more employment. And, the crazy part is our unemployment rate, which we'll get on Friday, is currently sitting at 3.4%. It's been 71 years since we've had a lower unemployment rate, meaning we are at an incredibly low unemployment rate. 3.4% is historically very, very, very low. I think just jumping up to 5.5% would be getting back to some sense of normality. Bring it on. Yep.
Yeah. If you can see, I mean, because like right now we're forecasting, over 200,000 jobs, and I just to show you how off they were in the last forecast. They forecasted just under 200. We got to have over 500,000 new jobs with the last job report. And right now, in my opinion, if you see a number, let's say this is just over 300,000 somewhere, I think you're just going to see another just this massive dollar leg.
Mm-hmm.
And I don't think the equities are going to like it, so it's going to be kind of dangerous to kind of be carrying, I think, long risk into this Friday event. But I also just wanted to pull up Japanese dollar versus the Japanese yen, just because this was a currency that you were just talking about. Yen is historically, you're right, it's just been on the floor. And the thing is that we are on, I think, on a cusp of a change in the Bank of Japan monetary policy. We got a new governor. I can't, these guys' names, I butcher it anyways. But the new guy, if you really like, because I was kind of studying I was kind of reading up on him and kind of looking at his past stuff. He's actually was in school with Ben Bernanke. That's who he was, that's his education kind of around there. But he actually wrote up.
Are you talking, the names are always tough for me too. Is it Kazuya Ueda?
Yes.
Okay.
Yes.
Yeah.
And but he had written kind of a paper or an article only a couple years ago saying that Japan's ultra loose monetary policy is going to have to change because speculators are just going to it's not going to be good for the Bank of Japan kind of going forward in the long run. So I do think that to something coming April, he is saying, though, it's like super loose right now. They don't expect any real shock and awe. Here this Thursday is when we're going to get the next one. And he actually just has said that it's, we're still going to kind of keep this ultra loose. But I could see, sometime in the, in the near future, we might see a little bit of a shift. But what we have right now, if I look at the dollar yen, this is a good kind of currency, to kind of watch, even for that kind of interest rate disparity that we were just talking about, because we do have the United States that could possibly be more aggressive. And then we have Bank of Japan just kind of sitting on the sideline. I hope you guys can kind of see my trend line here, but I mean, I got a pretty decent trend here, and I'm just kind of popping up on these, these big 100 and 200 day moving averages. But if I can get back above those, I mean, we probably got another 500 pips plus, potentially in this dollar versus the Japanese yen, just based off of what they're doing with interest rates alone. So it's a pretty decent shot, and you just kind of manage your risk on the other side of the trend lines. Like if you pull up, for those of you on a podcast, you pull up and can't see charts, and you do pull up a dollar yen daily chart. I mean, you can draw some pretty defined, a pretty sweet trend line.
Yeah.
So,
it's been a pretty good one. I'm going to show you real quick for the viewers. This is the monthly going all the way back into the 1990s, and actually I'll go even further. This goes back in the 1970s. Okay, now obviously we don't need to go back through that far at this moment in time, but just kind of putting into perspective of where we are based off historical levels. We had Scott McCormick back on in January of 2022, and he was calling out that 150 mark, which it shot up, hit 150, and now came back down pretty significantly. However, since 2012, it has been making higher lows and higher highs, and that trend for the U.S. dollar against the Japanese yen is looking pretty good. Now, what I would argue, and actually not argue, I would support David's thought that there has to be a change. If Japan does not change their course of action and start to raise their interest rates, they will continue to be the one that people trade against. They're going to buy the front currency and sell the yen. Margaret asked, is the carry trade still viable? Well, yeah. I mean, look here, you could trade almost anything against the yen. So, for example, you could go New Zealand dollar, Japanese yen. You would collect 4.75% for the New Zealand dollar, and you would gain, because it's negative, 0.1% for the yen. So you would be getting 4.85% simply for holding New Zealand dollars or US dollars. And in 2 weeks, most likely that US rate is going to be 5.25%, which means you get a 5.35% rate of return just for holding the US dollar against the Japanese yen. So yeah, it's going to bring more people to dump the yen and buy currencies against it. So it would make sense at some point for them to tighten this up and move their rates up. Otherwise, this will continue to get higher and higher. And is 180 off the table? Is 200 off the table? I don't think so. I think if they don't do anything, they're shooting themselves in the foot. So I'm glad they changed their governor. I do think you're going to see in the next 6-8 months a change with regard to their negative interest rate policy.
Yeah. And when they do that, when they do make that change, it's going to be a pretty major change, and that's going to have ripple effects through the entire currency market, global economy. But right now, I mean, the play on dollar yen, it is a kind of a carry trade, type play, and it's alive right now.
Does this mess with your head a little bit here, David? And I know it's tough, but you kind of the writing is on the wall for Japan to get off this negative interest rate policy. They're one of the only major economies in the world. Even the Swiss National Bank, which was negative, said, "Hey, we're done with that." Does there come a point when you trade that yen, you go into it with a little bit of trepidation? You're kind of like, oh man, I don't know if I want to get caught holding the yen either direction. When that announcement comes out, or is it, hey, the central bank's making an announcement on whatever, let's call it next month. Do I just err on the side of caution and go to cash during that announcement? How do you play that?
Yeah, that's probably the best bet. Like, honestly, the yen, dude, in all the years that I've been, doing this with you, yen has always been one of my favorite currencies to trade. But this year so far, I hadn't really been trading a lot of it because as the rumors were coming in that we were getting a new governor and that there could be some type of policy change, I started to get a little bit nervous. If I don't really have like a real clear picture of what I think a central bank is going to do, it makes it tougher to trade. But only because here recently they've been kind of reaffirming that, we're not going to rock any boats yet. It kind of opens up the door, and it kind of, traders can breathe that sigh of relief that, listen, okay, at least for the time being, I got at least another meeting, maybe plus,
right,
of no rate hikes. So
yeah, it makes it a little bit challenging and stressful if you're in those things. The old when the Swiss National Bank unpegged themselves, right? Remember that crazy move? What was that, 2015?
I remember, man. I had an office right next to you. Freaking both traded that. You killed it that day, man.
I didn't. I wasn't in that one. I was trading something else. I wasn't trading.
I know. I think you traded oil, weren't you?
I forget, man. It's been how many trades I make.
No, I remember.
You were my early onset Alzheimer's here for myself. Well,
but it was a big day. It was fun.
It was a big day, but like that one just came out of nowhere, and that's why you had your 1,000 pip moves in one day.
Yeah, that's true. And that you love those big shock things if you get on the right side of it. I'll be honest, like that that the Jerome Powell thing kind of caught me yesterday a little bit. I wasn't expecting him to drop like 50 basis points bomb, you know, and it was like, yeah, it was crazy. I was trying to trade, you know, my setups or whatever, and like I was literally like 10 pips away from my profit point, and then all of a sudden it was just like bam, and like it just complete reversal. I didn't even get to blink before it just wiped everything I made out.
That's crazy how quick it happens.
Yeah, that sucks how that happens, man.
Yep. All right, so let's see. We talked about a lot of the different currency pairs out there. So there have obviously you had the three major announcements this week with Australia, Canada, and Japan. Japan's still yet to come out, but that most likely is going to be negative 0.1. Here is the one for next Thursday, which is the 16th of March. That's going to be the EU coming out with their main refinance rate, which has vaulted. They've only been raising for about 5 meetings now. They were stubbornly trying to keep it as low as possible, while the U.S. and most other places were raising like, you're late to the party, guys. They're at 3% right now. I believe the expectation is another 50 basis points for the euro. And when we look at that price chart, you know, you had a beautiful rally up there, and then all of a sudden, for about the past month, it's just been pretty much just nothing but selling here. What are you looking at, and how do you trade that one?
I just shared my screen.
Yep, I got it.
Like,
yep.
You got it. Okay. This is another one. Like I had this, we kind of like, as you can see, we're just kind of like hitting right on, kind of like we got a last little kind of line in the sand. You got a couple big moving averages to kind of work our way through. But, you know, to me, you know, this pair looks heavy. And if it, you know, we're not really getting you know, you kind of had a little bounce out of there the first time. Now we're just sitting in it, you know, which doesn't usually bode well for longs. And so like I just had this kind of area mapped out. I had kind of the bottom of this green area kind of called as a target for a bit. And I think it's, you know, potentially going to make it here this time. But it gets into another thing. You know, I pulled up a few different charts, and I just those big, it's you kind of see the same thing, those same big price points, you know, just you know, kind of breaking through. And then it's just the matter of trying to complete for like kind of big picture. These are my favorite trades, just moving from, it's the same price points, like 107, here's a 750 to a 250. And we're kind of right at the midway point right now, but you know, we'll see how low this thing goes. But it's like we're going to have to, before we figure out kind of what the next leg is, we're going to have to wait for a job report and CPI.
Well, I think next Wednesday you've got your CPI number. Thursday you got PPI number. So you got a couple big, and by the way, I believe that it's either Wednesday or Thursday. You also have retail sales numbers, which of course has been a major mover for some of these retail companies. So it's going to be a big couple of weeks here for the markets, which is why I love the graphic to start the show. It kind of says it all, the Central Bank Tsunami, and with that dapper looking David Warner there. AI did you wonders, man. It was funny because I had
it really does.
I had Justin on the show yesterday, and it was not cooperating. Like, it kept making his picture look all goofy and cartoon. This looks like a nice profile picture, man. This could be your Tinder profile if you need one.
Yeah, right. That's funny. Yeah, but I sorry, man, I lost my thought.
Go ahead.
You're right.
All right, so we talked about the central bank tsunami, obviously pressure from most of central banks. What do you think, or I guess you don't really care about this stuff, I don't think, but at what point do you look and say, okay, Powell's going to stop? I mean, at this point, he has not said anything even remotely close to we're letting up. It's saying we're going to keep the pedal to the metal. He said, I'd much rather be more aggressive than be too easy and let things get away from us again. So that was pretty, in my mind, just saying expect 50 at this meeting, maybe 25 at the next, and maybe start to slow down, but it doesn't seem like it's going to start to drop. What things are you looking for, or do you pay attention to, our market's going to turn, you just play what he gives you?
Well, I mean, you're going to follow kind of how the job market is and, and the inflation, because it is like if they're just may say, well, data dependent, it's like, then you kind of have to be data dependent. But, everybody's trying to figure out when that pivot is going to be, because that's when it's,
right.
Then it's gravy train, then It's just like, okay, well, now whatever direction we were going in, I'm just going to flip this because the Fed flips, the Fed pivots, we pivot. And so I would, I'm honestly going into these like kind of events on like an event on Friday, like going in with a position or kind of having like these little like limit orders kind of peppered around, especially if you're getting too close to the price, I think is extremely dangerous. I would rather just kind of like clear out the order book and be flat and then just kind of see, kind of react to it rather than try to predict it. Because I feel like, you know, these type of events are going to, in my opinion, they're going to be like, they're bigger than a technical level from
Right.
like a couple months ago.
Oh yeah, way bigger.
Yeah, you know, so this market's just gonna, it's a hot butter, just a knife through hot butter, or hot knife through butter, excuse me.
Hot butter through a knife would be a weird one, but I like it.
That
All
would
right.
be a weird
Good.
one.
So one last question for you. Over the years, I've loved creating graphics for you that portray your affinity for a specific currency. You had a yen love affair going on for a while. You were then madly in love with the British pound.
Yeah.
I don't see any currency romance on your calendar right now. If you had to say, man, this is the currency I love right now, what would you say it is? And why?
I would say over the last, it still is the yen and the pound.
Okay.
It still is.
You're a swinger. You're doing two.
I did, yeah.
Wow.
So like you know, in the last couple of weeks, you know, run a kind of a Discord group, have a boot camp, and I've been really kind of laser focused on this pound dollar. And today I actually had a little we had a room this morning, and I was trying to just do a little bit of a counter trend trade because I thought we had hit some, you know, just a supply level, or excuse me, demand level that hadn't been hit since, you know, Thanksgiving. So I thought we might get some kind of move out of there, but you know, market was just, this doesn't want to do anything. It's just like, we are waiting for NFP. I think that's what the dollar is basically saying. I think tomorrow's going to be probably a pretty boring day.
Yeah,
for the United States dollar.
Yeah, well, I think especially the tail end. I mean, after the unemployment numbers come out on Friday, I think even your Monday and Tuesday will be rather quiet, and then Wednesday all hell breaks loose. Well, at least for CPI numbers.
Yeah.
All right, so I've got the British pound up here, and you guys can see there's the level he was talking about coming back in.
I'm sorry, I thought I was sharing it. No,
it's okay. I mean, I can drive, okay. But all right.
Yeah, I know you got it.
I got your chart up now, so you can walk us through.
Oh, I'm sorry. If you were calling it, it was just this kind of down in here. It's just kind of like a one last ditch effort, and just trying to connect some green lines in a sense. I love doing that. And that was kind of the plan, but the market just took a nap on me.
You know what? Sometimes I'd much rather market take a nap than wake up and scare the bejesus out of me. So
that's true.
And you got the exact opposite picture when you look at that Japanese yen, right? When you look at you mentioned you love that yen. USD has been trending up since, you know, call it February of this year. Been in a really nice uptrend. Actually broke the downtrend. You know, could contend that we are in an area of supply at this moment, kind of going back to that back
it's
into
true.
You know, December of 2022. Are you looking at that as, okay, this might be an opportunity to buy a pullback into this current uptrend, or just short it outright?
You know, I would rather probably buy, you know, it depends on how I'm feeling. I don't really like to counter trend trade too much. I know that I'm showing you a counter trend trade that I took, but I was trying to take it more of like, it was a freaking elastic band. Yeah. And I thought that I would just get some type of
rip up.
Just a pull back. You know, I feel like we still could get that before the NFP on Friday. So I just like, you know, I feel like the market is going to kind of maybe drift up a little bit, you know, just to maybe find a better spot to short again, because I don't really see any real catalyst to create a new low before we get like a number, like an NFP number. Well, why would there be a reason to make a new low from here until we get that? That's how I was trying to play it.
All right. I like it. I like the analysis.
Yeah.
All right. So tell us a little bit about what you've been up to. I mean, I know you like all instructors, you're kind of teaching all over the place. So what's going on in your world now? Where can viewers find out more information about you? And
I just trade. I've been teaching at Top Trading Pros. You just go to toptradingbros.com. I'm actually doing a boot camp right now. It actually ends tomorrow night, and I have some, you know, brand new, never traded forex before students, and it's like a night class, which has actually been pretty cool. I spend like a couple weeks, couple hours each night, Monday through Thursday, Just kind of teach them my strategy. Get to hang out in a kind of a Discord group together, and just see if they want to kind of continue on with it. I got another boot camp coming on March 27th. You can go to toptradingbros.com and you can kind of read about, kind of what the class covers. But it's cool. I have a lot of great people over there, and a lot of really smart traders, and it's been a great positive experience so far.
Nice. Well,
Yeah.
I mean, last time I had you on, you were talking about how you're gonna do all this stuff on Twitter and more active with your posts. What happened, man?
You know why? Because now I run this Discord group, and I don't. I give out my secret sauce in the
There you go.
Discord. Yeah, instead of and that's how I had to figure out. But you were right. Like when I was I was trying to figure out what I was doing. That was my outlet to kind of give trade ideas. But now I can't. I don't want to give them for free over there when people are paying for
There you go.
them.
All right.
Here,
Okay. Cool.
so.
I get it. Well, hey man, great to have you on. It's been a while. I'm glad to see you're doing well, and hopefully get to see you out here in gloomy California. It's been ugly for about a month now, but
Has it? Yeah.
Tom says, "What's the name of your Discord group?"
Oh, it's Top Trading Pros. It's not going to be a public one. If you want to join it, you'd have to come through the Top Trading Pros.
There you go.
Yeah.
All right, David. Well, hey, thank you very much. We'll see if we can get you back on next month and see if your love affair for the British pound, Japanese yen has changed at all. Maybe who knows? Maybe get you some Swiss franc to mix it up and go for a little. No, not gonna happen. No. All right, buddy. Well, thank you so much. I'll probably be chatting with you on Friday to see how all this goes after our unemployment and non-farm payrolls.
That's cool, man. Yeah, but yeah, I'd love to come on again soon. So that would be great.
Sounds good, my friend. Take care.
Take care, buddy.
Yeah, that was David Warner of Top Pro Trader. They got his webpage over here. I had it up here. Or Top Trading Pros. Sorry, I got that name wrong. There you go. Top Trading Pros. You can find out more information by going to that site for David Warner and any information about his classes coming up. So there you go. Okay. Central Bank Tsunami, guys. This next week. Actually, I think the remainder of this week, really from Friday through the 22nd, is just going to be absolutely crazy. Next week, I think, will probably be the most volatile simply because of CPI, PPI, retail sales numbers. This week, you've got on Friday the unemployment numbers, which is going to be, I think that's going to surprise a lot of people by the number that comes out. I'm kind of thinking it's not going to be that high, and if it is, then that gives more fear for the markets that the rate increase of 50 basis points will stand, and maybe we start to see a belief of more increased rates going forward. But we'll have to wait until Friday and actually till mid next week before we get some major changes to the Fed funds futures. So let me run through a couple of economic pieces here. I really don't have too much to discuss, but I will go to the economic calendar for tomorrow. Here is for the 9th, you can see you got challenger job cuts, unemployment claims, natural gas storage, which natural gas continuing its slide today. We had that nice, great rally of 81% in oil in just over a week. And all of a sudden, the markets giveth, the markets taketh, and took quite a bit of that back. So we'll look at natural gas charts here in just a second. For the other parts of the world, you can see you have some inflationary data coming out for Japan with their PPI numbers. They're expecting those numbers to drop, which I find hard to believe given the fact that they are still at -1. Cheap, easy money usually hurts and from an inflation perspective. But you also have a tentative rate announcement tomorrow for the Bank of Japan, which is expected to stay, as we mentioned, at -0.1. If you're trading the British pound, tomorrow night, long after we finish this show tomorrow, there will be GDP numbers, construction output, goods trade balance, service numbers, production numbers, manufacturing numbers, all coming out for the British pound. So that may create some opportunities for anybody out there who's got pound in their portfolio. And right now, that chart, as we looked at with David here earlier, it looks like it's trying to break down below this current demand level right around 118. So keep your eye on that one. That could be a nice big dip for manana's session. Now, run real quickly before we wrap up. I'm going to run through our top 7 just to take a peek at what's been going on. Crude oil was your major loser for the day, but again, still stuck in this big sideways range. Dead center of it right now at $76.66, down 1.19% on the day. You've got the Dow basically, I don't want to say unchanged, but it's like it's challenging that level that we saw from 5 days ago where it broke down below 32,600 on the Dow futures. We challenged that today, then bounced right off of it. So some would argue you have a hammer formation, kind of like we had a shooting star 2 days ago, which does bode well for anybody who's bullish on the Dow. Gold and silver still looking kind of weak. You had gold stuck right at that level at 1820. It was down 0.08% as of this exact second. However, the good news is it didn't rip down below that area that we bottomed out at just about a week ago on February 24th. So for those who are long gold, as I am, I'm more long physical gold. I don't have any of the ETFs or futures long, just physical gold coins. The picture doesn't look great, but at least you're not breaking down below it at this moment in time. Moving up towards our podium, Russell 2000 pretty much unchanged on the day along doji, if you will. You have spinning top doji, which is an open and close right around the same price, and topping tails above and below. That is a nice indecision candle. We'll have to wait and see what tomorrow brings to get us any sense of direction there for the Russell, but pretty much unchanged on the day. Third place goes the S&P 500, which looks similar to the Dow, but not really as strong of a hammer formation. I don't get any real clear sense as to where this one's going. I actually thought we'd see more downside movement and challenge those lows, getting down to around 39.40 on the S&P, but we didn't quite get there today. As you can see, our intraday low was only at the low was 39.71. So I think further downside there is certainly probable. All right, Bitcoin positive. I can't believe I'm saying it. We have an update for Bitcoin, although it's only 0.2%. Really, I'll call it unchanged, 22,115. And your best performer, the NASDAQ, had a nice about face. It was negative for most of the session and then just kind of eked its way back into positive territory, 0.49% gain for the NASDAQ on the day. With regards to other things, we already talked about that dollar index, which has this huge impulse move to the upside, which I tweeted about yesterday, and then you have that spinning top. Typically, when you get those things, that's that calm before the reversal. So I'm curious to see if this does reverse tomorrow in the dollar index. If it does sell off, expect to see some nice rallies in the equity index markets, and the Dow had that nice hammer formation to coincide with that. And lastly, we'll look at the bond markets here. 10-year, fairly unchanged on the day. It says down 0.15%, so not really anything big to speak of there. Nvidia and semis propping up the NASDAQ today. Well, Nvidia, this is the juggernaut, man. I am very bullish on Nvidia. We talked about this one with Larry a couple weeks back, and just because of what they're doing with their chips. If you read the article I wrote for barchart.com talking about embracing AI, Nvidia, I don't think that many of you, and maybe you do, but how many of you, if I said, hey, who's one of the big leaders in AI, how many of you would think, oh, NVIDIA? Sure, duh, it's got to be NVIDIA. I wouldn't have thought that until I was digging deeper into it and realizing that in order to process all this information that ChatGPT is doing and Midjourney and a lot of other AI protocols, that you need to have really high-end processors. So the most sought-after processor right now for AI is the A100, which is NVIDIA. They're saying it's a $10,000 chip. So very interesting. I think that AI, in some of the interviews I've read or watched with the CEO and other individuals from NVIDIA, they're like, this is where we want to go, right? We want to be these chips that run all the AI systems. And I don't see Intel saying that. I don't see AMD saying that, but NVIDIA put their focus on it a while back, and they're carrying it out. So I'm pretty bullish on them, even though I see Chase says AI hype seems overblown. I wouldn't put this, I know people feel the crypto hype is overblown. I don't think AI hype is overblown. I don't think we've even really scratched the surface on implementation of AI technologies into businesses. And I believe when that does happen, then things really start to change. Again, employment is going to be a big issue. I think efficiencies will start to increase dramatically for companies, and that means translation into bottom line, big gains for it. So that could be the next big bull market catalyst is implementation of AI, but we're not quite there yet. Are you following the Grayscale? No, I'm not following the Grayscale court case. I really try to stay out of the media as much as possible. Yeah, that's just, I don't know. I just feel like I get swayed in my opinions by watching different media outlets. So I generally don't watch the news. I'd rather make news than watch news. And then the last part I have here is for earnings for tomorrow. It's the best earning day of the week simply because you have one major name, and that's going to be Oracle here. Oracle reporting earnings after market close tomorrow. You also have JD.com and Ulta Beauty, and that's pretty much it. All right, so for tomorrow, I don't have a guest. I got nobody lined up, not yet anyway. If I have some time, I may see if I can find a guest, but it's, well, I want someone that would bring something good to the table from a discussion perspective. So maybe I can find someone for tomorrow. But if I don't have anybody on the program tomorrow, let me know what you would like us to discuss. You can email me at TraderMerlin@gmail.com or put your comments down below the YouTube videos. Any one of them is fine. I see all the comments that come through, good and bad, and I try to filter out all the spam that's in there so you guys don't get tortured with that type of stuff. And by the way, there's somebody on Facebook who continually impersonates me and is trying to get you to sign up for free Bitcoin. I'm not giving you my Bitcoin. There's no way in hell I would give you my Bitcoin. I'm sorry, it's not going to happen. So if somebody named Merlin Rothfeld calls you on Twitter, on Instagram, on Facebook, on any social media platform, it's like, hey, how's your trading going? You have to know it is not me. There's not one person in here that I have contacted and said, hey, how's your trading going? It's just not something I do, and I will never ask to manage your money or to take control of your investments or have any of your account information. So if you ever see that stuff, report it. They're scammers. They're fraudsters. They should go to jail. All right. I want to read the last two comments here. Ganesh says, being in the industry, I believe NVIDIA is priced to execute perfectly. Small issue is make it fall deeper. I don't know what the S is there, but Tom says ChatGPT needs some chips from Texas and Florida. I can't define what a woman is. What? I'm confused on that one, Tom. Anyway, all right, guys, that's going to wrap it up for today's show. No guest for Thursday, so I'll be just at your beckoning call. Whatever you guys want to discuss, email me. Put it out down below any of the YouTube videos, and I will get to all that on tomorrow's show. That said, thank you guys so much. Have a fantastic day. We do have, small announcements happening tomorrow, but really it's all about Friday's trading session. Take care, everyone. I'll see you on Friday or on Thursday. Tomorrow. Jeez, I'm out of here.